Welcome to the OWL Bundle User Group Study Meeting 93, based on Dr. Ken Long's trading methodology and techniques. Today, we will delve into market scans, swing systems, and backtest studies. Our agenda for today includes market scans, an overview of the swing systems v3.18 template, and a detailed look at backtest studies, specifically the RL10X SMA30 study and Dragon exits. Let's start with the swing systems v3.18 template. This template helps in analyzing market conditions and identifying potential trading opportunities based on various market metrics. The risks indicator shows a cautiously bullish market but highlights the need for vigilance for signs of breakout continuation or potential pullbacks. The market is showing short-term weakness within a longer-term uptrend. Traders should remain cautious, especially if short-term indicators breach key levels. The market is losing momentum with no sectors showing positive slopes. Energy, financials, and materials sectors suggest caution, while the decline in SPY and XLK indicates risk-off sentiment. Most sectors are showing weakening slopes, particularly industrials and utilities. Defensive plays like staples and utilities remain flat but lack upward momentum, suggesting caution in market sentiment. GLD stands out with rising momentum, reflecting a possible flight to safety amid broader market weakness. Other assets show varying degrees of performance. Commodities like GLD and SLV are leading the momentum, indicating increased risk aversion. Long-duration bonds are stabilizing, hinting at cautious market sentiment. Momentum is broadly weakening, with risk-sensitive areas like small caps and mid-caps leading the decline. Growth-oriented large-cap names are holding up but struggling to gain traction. In summary, the market is broadly losing momentum with no sectors showing positive slopes. Defensive plays remain flat, and commodities indicate increased risk aversion. Large-cap growth names are holding up but struggling to gain traction. Next, we will dive into the backtest studies, focusing on the RL10X SMA30 study and Dragon exits. We will explore various exit strategies and their performance. The backtest studies will cover the RL10 crossing SMA30 versus Dragon exits. We will look at intraday and daily timeframe backtests, summary, and future study directions. This strategy involves entering a trade when RL10 crosses above SMA30 and exiting when SMA30 crosses above RL10. It aims to capture significant market movements. Here, we see the RL10 SMA30 long entry strategy with various Dragon exit points. This approach helps in optimizing exit points to maximize profits and minimize losses. This slide compares different exit strategies over a 3-minute, 30-day period. Each strategy's performance metrics are analyzed to determine the most effective approach. The summary highlights the best overall performance by the Baby Dragon exit, followed by other strategies. Key strengths and weaknesses of each strategy are discussed. This slide compares exit strategies over a 5-minute, 90-day period. The performance metrics provide insights into the effectiveness of each strategy over a longer time frame. The summary for the 5-minute, 90-day period shows the Baby Dragon exit as the best performer. Each strategy's strengths and weaknesses are analyzed to guide future trading decisions. Let's start by comparing the 10-minute exit strategies over 180 days. We have various strategies like base, Baby Dragon, Skin of Dragon, and Spine of Dragon exits. Each strategy shows different performance metrics such as total PL, win rate, and average PL per trade. In this summary, we see that the Baby Dragon exit has the best overall risk-adjusted performance, while the base exit has the highest total PL. The skin of Dragon Exit offers a balanced alternative, and the spine of Dragon Exit shows the lowest performance. When comparing intraday Dragon Exits, the Baby Dragon Exit consistently delivers the best total PL and profit ratio across different timeframes. The base exit also performs well, especially in longer durations. Now, let's shift our focus to the daily timeframe from January 1, 2010, to November 24, 2024. Over a 15-year daily backtest, the Baby Dragon Exit shows the highest win rate and profit factor. The RL10X SMA30 exit is ideal for long-term investors, while the RL10X Baby Dragon Exit suits short-term, high-frequency trading. The RL10X Skin Dragon Exit offers a balanced approach. Summarizing both intraday and daily performances, the Baby Dragon Exit dominates in most metrics. The RL10X SMA30 exit is best for long-term intraday strategies, while the RL10X Baby Dragon Exit excels in daily performance. Next, we compare Baby Dragon Exits with price-low exits over a 5-minute, 90-day period. Here, we see the performance of different exit types over a 5-minute, 90-day period. Each exit type, including Baby Dragon, Low X Skin, and Low X Spine, shows varying results in terms of total PL, win rate, and average PL per trade. For maximum profitability, the Baby Dragon Exit is recommended. For risk management, the Low X Skin Exit is ideal, and for a balanced approach, the Low X Spine Exit is the best choice. The RL10-based exits on SPY show better performance in trend-following behavior and total PL compared to price-low exits. These exits are designed to capture larger trends and offer better risk-adjusted returns. In trending markets, the RL10X Baby Dragon Exit is preferred for intraday trading, while the SMA30X RL10 Exit is best for daily trading. In choppy markets, the RL10X Spine of Dragon Exit is recommended for both intraday and daily trading. This chart illustrates alternative exits based on trending versus choppy markets, highlighting the effectiveness of different strategies in various market conditions.